Good morning to all. Welcome to my channel. Today we will be discussing under budget and budgetary control, that is flexible budget. You see, if you calculate this on the basis of capacity utilization, we can prepare two types of budget. One is fixed budget, another is the flexible budget. What this fixed budget means? Fixed budget means based upon this capacity, say at 80% capacity level, you can make your budget. So your only one point, that is 80%. And what is that alternative is that is the flexible budget. So flexible budget, you can make it at your different levels of your capacity utilization, say 50% level, 70% level, 90% level. What is the importance of your flexible budget? Meaning for that, so at your different capacity level, if you calculate that, your structure of budget differs. Based upon that, your fixed expenses, semi-fixed, semi-variable, all these things we have to take into considerations of your flexible budget, which is not be covered under your fixed budget concept. So now to take an example for that, we will be doing for these things. One problem is there. One Messrs NP Limited produces a standard product. The estimated costs are given below. So raw materials 10 per unit, direct wages 8 per unit, and direct expenses 2 per unit, variable cost is over for 3 per unit. Okay, then now another problem is there. Given that thing, the semi-variable overheads 100% capacity level 10,000 units are estimated to be 40,000, and these overheads varies in steps of 2,000 for each change in output. So these portions is the variable portions. Your total these things, your semi-variable overhead is these portions. Out of that, your this portion is variable. At every level of production of 1,000 units, your 2,000 will change. Fixed overheads are estimated at rupees 50,000. Selling price is expected to be 40 rupees. You have to prepare the budget at 50% level, 70% level, 90% levels of capacity utilization on the basis of marginal costing concept. So now we will be going for this total calculations part way. You see that your capacity level, say 50% level, 70%, 90% level, your output is 5,000, 7,000, 9,000. So since we are, as you have been in your problem, it was given that you have to do under your marginal costing concept, then you have to give your prime cost and this total marginal cost you have to go. So once you are going this prime cost, you have to take your material, you state where you see that here your 10,000 is your this raw material. So 10,000 is 5,000 here, 50,000, 70,000, 90,000. Similarly, direct wages, it is your 8 rupees per these things, and your 5,000, 40,000, 56,000, 72,000, it is direct value. Direct expenses, your 2 rupees per unit, 10,000, 14,000, 18,000. So total it comes 1 lakh for 50% level, 70% level 1,40,000, and 90% level 1,80,000. Now important point for this problem is that what is your variable overhead? You see that your variable overhead is 3 per unit, but one portion of your semi-variable overhead, out of that you have to find something. So what is that? You see that after certain stage it will be 2,000 for 1,000 units. So per unit your variable portion how much? 2,000 divided by 1,000, that is 2 rupees per unit. So your initial variable overhead is 3 rupees plus 2 rupees as per this variable concept. So 5 rupees per unit. So 5,000 unit 25,000, 7,000 35,000, 9,000 45,000. Then your marginal cost is coming 1 plus 2. Your 1,25,000, 1,75,000, 2,25,000. We have to taking it the figure here since a space problem is there. So this 1,20,000 marginal cost and sales. Sales is your expected rate, sales is your 40 rupees. So 40 rupees multiplied 5,000, 2 lakhs, 2 lakh 80,000, 3 lakh 60,000. So total contribution is coming 75,000 for your 50% level, 70% level 1 lakh 5,000, and 90% level at rupees 1 lakh 35,000. So this is the thing. Now you have to calculate that contribution marginal cost concept. Contribution to fixed cost you have to minus it, then your profit will come. Here fixed cost is there. You see that initial fixed is your 50,000. Now you see that out of that 40,000 your semi variable, matlab some portions fixed and some portions variable. So how much your total 40,000 is semi variable. Out of that your variable portions you have to minus it. So you see that 10,000 units at your capacity level. So 10,000 into 2 per rupees. Okay, so semi variable at this level it will come. So 10,000 into 2 equal to 20,000. So your total 40,000 semi variable over 2. If you give the variable portions, then your 20,000 will be the fixed portions. You are getting my point. So these things you have to add with your fixed cost part. So initial fixed cost is 50,000. From your share of your semi variable overhead, that 20,000 fixed has come. Taking together 70,000 is coming. So 70,000, 70,000, 70,000. Then profit is coming 5 minus 6, contribution minus fixed cost 5,000, 35,000, 65,000. So what we understand from this flexible budget, you see that at different levels of your estimation, your different levels of your profit. So from there you can fix that what level based upon your capacity you can choose a budget out of these three alternatives, and that opportunity was not available in case of your fixed budget concept, say 80% level. Suppose if you could get your only 50% level, your profit could have been restricted to only 5,000 only. Now here you have three options available before you. Either you can go with your 50% capacity level, 70% capacity level, 90% capacity level. Because in these options, you are flexibility, that is semi-variable overhead part, you can properly utilize for your fixed portion of that, and at the same time variable portions for that. So this is the only for your on the basis of capacity utilization basis we are doing, and functional basis in my subsequent video we will be discussing for that. That is individual section wise budget and master budget in my subsequent video will there. So please do subscribe to my channel so that whatever new videos will come, you will be available to you. We are ending the video here. Have a good